Good morning, everyone. Thank you, Rajendra, for that introduction. Let me add my note of welcome to all the CFA charter holders on screen, as well as all of our guests who are participating today. So good morning, very early good morning to those of you in Asia, and perhaps even earlier for those in Europe and other locations if you are dialing in. So thank you again for participating. It is a special privilege to have with us Mr. Hiro Mizuno. As Rajendra began to explain, Mr. Mizuno is the UN Special Envoy on Innovative Finance and Sustainable Investments. But he's also the former Executive Management Director and CIO of the Government Pension Investment Fund of Japan, which some of you will recognize is one of the, if not the largest asset owner in the world. So Mr. Mizuno, in both those capacities, is more than well qualified to talk to us about new trends in institutional investing, particularly as it concerns very large investors. Hiro is also on the board of PRI, Principles for Reasonable Investments Association. In that capacity, I think we can bug him a little bit about what we should all aspire to accomplish as professionals in this investment world. He rounds out his resume with a very impressive set of organizations, such as the Global Future Council member of the World Economic Forum, special advisor to the Milken Institute, and council member of the CFA Institute's Committee on Future of Financial Advisory. Among other things, Hiro serves as an external board member of Tesla, as well as Danone. In Danone, he serves on the mission committee to promote sustainability in the world of business. Welcome, Hiro. Konnichiwa to you.
Thank you very much.
Thank you. What we'll do for today's conversation is do it in three parts. The first part, I'm going to invite Hiro to speak about innovative finance and sustainable investing. He is also interested in sharing with us several the output of several recent conversations he has regarding the principles of responsible investing. So he'll sort of do an amalgamated conversation that relates both to the demand side of the house, if you will, climate change and what it entails for large asset owners to do, but on the flip side, how should professionals behave in this context? Thereafter, what I will do is go into a Q&A conversation with Hiro, and we can more fully explore the very rich background that he brings to all of us. And then we will close with a Q&A section. Approximately, say, 20 minutes for the first talk, and maybe 20-25 minutes for the conversation, followed by Q&A from the audience. With that, welcome again, Hiro, and I'm going to hand it over to you to begin with your comments on both ESG as well as address our both charter holders and investment professionals who are in this call. Thank you.
Thank you. Thank you very much, Narayan, for your kind introduction. And it is my extreme honor to present at the 11th India Investment Conference. And also, I'm very excited to share my perspective with the investment professional community, particularly CFA charter holders, as I have recently spent a lot of time discussing with the CFA Institute as well as the the UN on the ESG and the sustainability agenda after I stepped down from GPIF CIO role. So it's my great honor to have this opportunity. So first of all, I know that the Narayan has several good questions. So I just want to start with sharing maybe a little bit controversial, but I just want to throw in some of my recent thoughts on what's going on in the capital market, as well as what I expect from the investment professionals. So we all observing with a lot of interest what's happening in Wall Street over the last several weeks. What's really, the happening is it's a transfer of power from the institutional or some privileged, the group of people to retail clients. And that kind of the transfer is happening in any industry, because now, retail customers or retail investors are more informed, and they can actually, communicate through the SNS to actually the work together. This case, like they actually attacking the big institutionals. So I think that what we are observing is we just need to reflect what the industry has been offering to our customers, because it's not very different from any other industry do you invest in as investors. The power shift is really happening, and Wall Street or like our industry is no exception. So we need to make sure investment professional will continue to be needed by those clients, and just having the privileged access to the information, or like to have more analytical resources around you, and has more sort of like a cloud managing big capital. I used to manage 1.6 trillion, but it's no longer good enough to add the value or deal with your clients. So we just need to make sure that as an investment professional, we will be necessary in the future of capital markets. So that's one thing I just wanted to draw your attention. And that's actually the behind of my sort of leadership to promote ESG in the asset management industry over the last 6 years. Because 6 years ago, when I became a CIO of GPIF, I questioned myself, trying to bring in all the other theories and the tools and whatever I learned throughout my career as a finance professional to deliver better performance for GPIF. But the managing $1.6 trillion, and we are regulated, diversified, probably more than necessary. I concluded that what we have learned throughout my career is not really helping. So we came up with the idea together with the team, the idea of a universal ownership, which is, our professionalism used to be only about the portfolio we are managing, but we actually advocated we need to expand the boundary of our sort of like ownership or responsibility beyond the financial ownership. Because if you make money by investing in a company which create a lot of negative externality, which will affect the whole system, and in 10 years time, the part of your portfolio will end up paying for it. So I just wanted to brought up one the seeds of thought, which is on the top of managing the portfolio you are managing as a professional, I think the paying attention to what that portfolio is, how the portfolio you own is affecting or you manage affecting whole system or the whole world is actually this kind of like the coming back to you and affect your long-term performance. So one thing I just brought in and draw your attention is I would like to ask you to pay attention to outside of your portfolio or consequence of the businesses you are investing in to the world and to the society, and also the long-term performance of the capital market or long-term healthiness of the capital market. And then second is, I spoke with many young, business leaders because I'm a visiting faculty of the Harvard Business School, Oxford, Said, Cambridge, Judge, and Kellogg Northwestern. And what I've been hearing from the younger people who's now studying for those at those like elite MBA school is investment professional is becoming less and less popular. And the reason why is that they think like, the investment professional only, interested in, the making money and looking at the chart, and they think our industry is paid too little attention to the impact of our, investment decision. So you'll be surprised to hear how passionate those young business, business school students are about the, ESG and those kind of sustainability. And the GPIF is now, taught by Harvard Business School professor in their case for ESG. And now it's being taught as a mandatory the case for the HBS students, and now being taught at the other major business schools. So I think the the ESG is becoming one of the things like just the add a bit more perspective to what we are doing. So I really want to draw your attention that the ESG is not about just hedging a risk or just managing a portfolio, but probably it will have a significant impact on how our industry will be perceived in a society. And that's exactly what I have been discussing with the CEO of CFA Institute, Margaret Franklin, several times, that we just need to make sure the younger professional continue to respect our business. And also, if you look at how the Larry Fink and all those like a CEO of the asset management company is talking about ESG, now they think ESG is essential and almost the condition precedent for their business. So I think this is where I would like to urge all the charter holder to get more involved and get up to the speed of what's happening, because this is the area you probably need a continuous education, because obviously, I mean, I'm probably talking to the mixed audience. I mean, some are more seasoned, some are the more new charter holders, but obviously it was not in your exam when you studied for that, so for the charter. So that's the area. I think we just need to fill the gap. And the second point I just wanted to touch upon is, as now the special envoy for UN on the innovative finance and the sustainable investment, I'm trying to promote together with UN Secretary General more the financing behind the businesses, and also the government trying to promote the sustainable economy or sustainable businesses. And as you can see that UN Sustainable Development Goals has the 17 goals, and one of those goals, which is probably has the most overarching effect, is the climate change. And India is the third largest the emitter of the CO2, and it's a growing growing country and a developing country. So how the Indian business will build their business, and how the Indian government will build their infrastructure will critically affect where the world is going. And so globally, we are talking about what's the role and responsibility of our industry, finance and asset management industry, to accelerate the world transition to sustainable economy, and how the Indian investment professional and the business you invest in, and also the government you're working with will make a significant the impact on where the world is going. So I definitely would like to ask you to, first of all, just to pay attention to what kind of discussion we are having at the global at the top the political leaders meeting. We are going to have G7, G20, and COP26. And given the President Biden is very keen to promote the green economy, and you may have heard Japanese Prime Minister also committed to 2050 net zero. So this is going to be a big topic. And I think the how investor, asset management professional will react to that will probably impact your performance as well. And one last thing I want to mention is, the ESG is probably new and probably not fits perfectly well with what you have been using for your financial analysis and decision making, but it's going to be big and it's going to be even more critical for your analysis. And the CFA Institute is working on it, and I definitely would like you, the charter holders already in the field, trying to just to spend some time to understand what's going on and see what's the best way for you to contribute, and that will also contribute to the future survivability of our industry, which is the financial industry and asset management industry. So that's all for me, from me. And again, it's my pleasure to talk to you, and I'm looking forward to discussing with Narayan. Thank you.
Thank you, Hiro. Thank you very much for those remarks. As you know, I had prepared a few questions for you, but I'm going to modify them based on what you have just said. And I'm going to begin because in some ways, those questions were all related more specifically to investments and markets. And in some way, what you have said just now is perhaps a very good way to bring up a third day of an investment conference, which is what is the real purpose behind what it is that we are all doing. Mm-hmm. And I think you have certainly contributed to sort of lifting the debate from the finer points of price to may I call it stakeholder capitalism?
Yeah.
Where the stakeholder is not merely the ecosystem of individuals and entities around an investment or a company,
right?
But also in a sort of intertemporal sense includes time and the impact of very large scale effects such as things like climate change and so on. So I think you've touched on a very, very important topic of how do we modify ourselves from what we learned, particularly from the Chicago School, and most specifically in the 70s and 80s, towards a more inclusive form, without losing some of the positives of the focus and sharpness that the 70s and 80s brought. So perhaps I can turn it back to you and ask you to just spell that out a little bit more. I have heard you use the word stewardship. I've heard you use the word principal and agent, and why principals have been rather quiet and agents have been very vocal and sometimes rogue. So why don't I turn it to you to exemplify those comments a little bit further, and we'll stick with that for a moment before we get into what the analyst part of CFA talks about in a little while.
Yeah. So thank you. I mean, you just asked a really big question. So let me start with the what we mean by stakeholder capitalism. People use a different terminology, and some says like a purposeful business, or like people use a lot of different wording, but several things being sort of like discussed in all of those things is like, the concept of shareholders is only stakeholder, and CEO's job is to make sure that he or she is maximizing a return for shareholders. And that is the concept which the sort of Milton Friedman, described about 50 years ago. And some actually people believe that the Adam Smith started it, but I actually joined the Adam Smith, the Buzz House, the foundation. And Adam Smith, actually, he himself is a philosophist, and he actually wrote the book before the Wealth of a Nation that the ethics and morale is the basics for the economy. So it's probably not that Adam Smith who started, but anyway. So what we have been discussing, and including the Business Roundtable of the U.S., who made 2 years ago very, very high-profile statement, which is a statement of corporate purpose, saying, shareholders no longer are only stakeholders. So we have other stakeholders, their own employees and the customers and the society they are operating in, also include the other environment that they are operating in. Those are all stakeholders. And when you look at the, how to justify ESG in the traditional fiduciary duty, the framework, because when I started my advocacy for ESG integration for GPIF, the portfolio management, most common pushback was saying, "Oh, Mr. Mizuno, that's against your fiduciary duty because your fiduciary duty is to make money. Your fiduciary duty is not to make the world a better place." So my reaction or a counter argument to that was, you remember I touched upon universal ownership concepts, right? As well, let me put this a step back a little bit. When I became a CEO of GPIF, first thing I did was I analyzed our own, the portfolio management strategy, as well as the how, the other big asset owners' performance were actually determined. Is that determined by passive active, like the balance, or private public balance, or like fixed income stock, the equity balance? And what I came up with a very interesting conclusion, which is, everybody has a different bits and pieces, trying to make deliver better return. But when you look at the 20 years, 30 years performance of big asset owners, it's pretty much in line with what happened to global economy. So I said, oh yeah, well, it's our job as an investment professional, try to deliver better than the market. So that's why we always benchmark the market cap index. But as a matter of fact, if you look at the much longer time frame, we really cannot create the portfolio which is segregated or immune from what happened to the world. Right? So that's why I said, like, hey, if we are a big asset owner with a long-term investment, the horizon, at the end of the day, of course, we'll work to make our portfolio perform better, even just a little bit of inch or like a bit of base point. But, we need to make sure we are going to contribute to make the whole capital market, the whole system more sustainable, because that's the biggest, determining factor for long-term performance of the big asset owners. So that's where we came from. And then the ESG is the most effective tool to use to make the analysts, the portfolio managers, to use those concepts in their daily decision analysis and decision making. But from the shareholders' perspective, again, the CFO was under pressure in a similar way, whether it's in his fiduciary duty, trying to make the environment better. So the initial approach was, I actually approached the shareholders saying, for the shareholders to maximize their long-term performance, they need to make sure their portfolio company's CEO wouldn't make a negative, the impact or negative externality outside of their business, because that will be ended up, hurting the bigger portfolio which the shareholder is owning as a portfolio. And that's how we started. But I think after 5 years, my endeavor, what I came to realize was, now is the ESG becoming more and more sort of as I said, condition precedent. It's just like, we just cannot make money knowing this business or this government is actually having negative impact, right? So it just started as, the still equation was how to maximize shareholders' value and we try to interpret the ESG or sustainability in that context. Now it's becoming, we just cannot accept the business is going to make money by creating those negative externalities. So that's kind of like the shift in the people thinking happened over the last 5 years. And the one of the reasons I serve on Danone's mission committee is I found it's really inspirational. I mean, it's very inspiring to see Danone wanted to change their article of corporation to redesign their corporate structure to serve the multi-stakeholders. So I don't know how many of you know about this, but the French government passed actually revised their company law or corporate law 2 years ago by allowing the French company to restructure themselves as the enterprise mission, where they're required to serve the non-shareholder stakeholders. And they went for the shareholders meeting last year asking, because the Danone is an international company, has a global institutional investor base. So they asked all the big institutional investors asking, we are going to rewrite our article of incorporation to become an enterprise mission where you no longer be the only one stakeholder. And Danone received 99.9% support from the shareholders. So I think it's an epic, shareholders voting, because in the history, for the first time, institutional investor agreed that corporate should not only pay attention to how to maximize the return for their shareholders, but this is something I wanted to be very, very clear about. I'm not saying the making money for shareholders is not important. They have to do it because that's the original purpose of the corporates. But on the other hand, it's just becoming more and more clear we are on the same board. I mean, if the business continue to affect the environment, that business will pay for it. And even if they don't pay for it, the other part of the asset owner's portfolio will end up paying for it. So is that kind of like a more holistic thinking is behind all these debates? And at the same time, people brought in the sense of stewardship. So stewardship is the meaning you have to be responsible as an owner or the agent. So if you are agent, you have to be responsible for your principal. So that's what the stewardship is all about. It's just not like stewardship is like some people say I'm agents, I don't have to think. I mean, stewardship says it's not enough, right? So if you are a steward, you have to think and you have to be responsible. So now, I mean, our industry, particularly asset owner, and some people continue, they used to say, I'm just an agent. And I don't think that in the era of stewardship, that kind of like, the thinking is no longer acceptable. So I try to answer your big question in a bit different angles, but that's the kind of thinking behind all, what's going on.
So let me ask you again, the kind of both support and challenges that you have received to a pretty big transformation path that you are on or you're evangelizing on behalf of. So while you mentioned already the French government going in the direction that supports this transformation, I think that U.S. Department of Labor has issued some regulations towards the end of last year, which one might consider as de-supporting this path. So could I ask how can CFA members sort of stay abreast of, is this a transfer? I mean, I think people can sort of reflect, and for those of you who may not have thought about the issue before, I think you heard it here first from Mizuno, that the world is a big place, and the neat compartmentalization that we were able to successfully achieve in the last 3, 4, 5 decades is sort of giving way. and this larger issue of everything sort of pervading everything else is upon us. And therefore, it behooves you first to think about it. You can come up with your own conclusions, but Hiro is offering us one perspective as to the way that large institutional investors like himself, like CalSTRS in California, like the USS fund out of UK, and several others have begun to proceed down. So tell us some about the challenges and how you might overcome them, and then I'll go to the demand side of this, which is not what we sort of do from the inside out, but what climate change is demanding from us, so to speak.
Well, there are so many challenges, and the reason I'm so pleased to talk to CFA charter holders directly on this occasion is I always joke about this, but when I started the ESG advocacy, and I started even introducing ESG lensed indices for GPIF portfolio, I got huge pushback from different group of people for the different reasons, and which I found very interesting was, well, you can follow me in my Twitter. So Hiro Mizuno, you can actually follow, but particularly during the first 2 or 3 years, I received a lot of very harsh email, the criticizing, my ESG advocacy. And some people said you are like a religious leader and you really don't understand the portfolio management. And although I'm in industry for much longer than many people, but some people send me really, really nasty tweets. And when I have a spare time, I look into who they are. They're reading their profile, and believe it or not, 80% of them are CFA charter holders, including the one who's studying for it. So I think what I found it really interesting was it didn't fit into how we were trained as a financial analyst. That is obvious, right? So so that's why a lot of people think in let's say asset management companies, that came from the top as a marketing need, because several of the big asset owners, including GPIF, or you name them, Narayan, like CalSTRS and CalPERS and Norges, and those people started talking about the ESG. So the asset management company started, if we continue to denounce the ESG, we are going to lose customers, right? So that's how we started. Just to be honest, that's how we started. And then, so we pushed it. It's okay to hear your marketing pitch, but how you manage the portfolio, do you really integrate ESG into your analysis and decision making? And then we saw a lot of discrepancies. And also we again felt that, it's not naturally fits in the way that we learned how to make a financial analysis. So this is new, and honestly speaking, probably for most of the asset managers, it came from the marketing needs, but now it's becoming more and more their a daily routine. And some people call it mainstreaming ESG, but in my opinion, it's more like it's just making it in your practice. Now all the asset, the asset manager at least have the sustainability analyst or ESG analyst, and all the index provider now have their sustainability or ESG team. So I think they are building up the capability. And the reason I'm actually accepted to join the Future Finance Advisory Council of CFA Institute is, CFA Institute as actually holding the key, because now, maybe it started from the marketing needs, but it's becoming, cascading down into the actual, the portfolio analysis and portfolio management. And we continue to produce the young asset management or financial analyst without learning it. So I think this is a gap I've been discussing with the CFA Institute, and also this is an area I think we need to have the continuous education. So again, I do understand it's probably don't just fit into how we grew up with in this industry, but it's just becoming mainstream. And if you fail to, do that, you'll be left behind. And the other very common pushback was is that Mr. Mizuno, I agree, ESG is important, but there's no disclosure. There's no, information standard. So how we can make a informed decision? And my argument is, it doesn't mean that you don't have to do it. I mean, or that's probably exactly the area that the asset management or investment professional can make a difference, right? Because if everything is perfect and the market is perfect, there's nothing you can do to, there's nothing you can do to beat the market. That's more where the, perfect market hypothesis, kicks in. So I actually been trying to encourage the active managers take the advantage of this ESG shift, because there's a lot of the patchy information you need to use your brain to analyze, your brain to connect. So maybe in 10 years time, all the ESG information becomes readily available, and you can get the access to those standardized data without any effort. And then again, it will wash away your alpha creating opportunities. So I just kind of jump onto some of your next question, but I think that kind of things I discuss one by one. I discuss with active team, passive team, and a passive team is another example. We can change the index, but also we told the passive managers, if you cannot change the index, but you can still engage with the portfolio company with on the ESG agendas. So there's a lot of ways to be able to participate in this sort of industry trend. And I really think that if you are a professional working in this industry, and if you miss this ESG emergence of ESG in the business, I think you're basically risking, or it's basically probably even risking a whole industry, because as I said, the society getting really, really critical about our profession these days. And that's the reason why I wanted to raise that, about this GameStop thing.
Oh yeah, GameStop, BlackBerry, Blockbuster, all of it now. And we'll come back to the role of social media, because there's a lot of questions from the audience on it. So I'm going to hold that thought for a second. But for just a moment, if I can get you to turn the cap on backwards and say, from the outside in, are you optimistic about the Paris Agreement and the consequent climate action plan now that the US has returned to the table? And sort of coincident, and particularly over the last couple of years, you mentioned it, you alluded to it, several companies, including some very surprising ones like airline companies, have issued net zero proclamations.
Yeah.
Are these credible? Is this just a fad gone crazy, or do they mean it? And if so, one, what's happening? And then two, what should companies that are not doing it begin to at least attempt to do?
Yeah, I think it's just, it's a great question, but we have to look that from the different perspective. Is first perspective I want to bring your attention to is I promote the SDGs as the UN Special Envoy, and I've been asked many times by my colleagues or other the investment professional, how can we attach sustainable development goals with ESG? Because ESG and the sustainable development goals seems like the flip side of a coin, but the SDG is more like a UN is the big picture ambitious goal. ESG is what I'm required to do using my own daily portfolio analysis. So how we connect? So to that question, I always respond, you don't need to do it for the all 17 goals, but let's start with the climate change, right? Because we are trying to, meet the Paris Agreement to solve this problem, but it's very difficult to start with finding an opportunity on that journey. It may be changing now, but 2 years ago, everybody said it's hard to find the opportunity to invest in a company or invest in a technology to address climate change. So I started with risk analysis, risk mitigation, because some people may just don't genuinely believe in that, CO2 being the reason for the climate, global warming, but just take as a base case. The IPCC says, like, if we fail to achieve 1.5 degree or 2 degree, we are going to have this much, the trouble. And now we can analyze, if we fail to achieve Paris Agreement, what kind of risk our portfolio ended up having. So I always say, like, when I wanted to move my own team at the GPIF and also the whole industry, there's two ways to do that. One is to push the risk from risk angle. The other is push from the opportunity angle. And now, which is I observe with very strong interest is, first, you probably have to start with the risk angle, because it's much easier to move the investment professional or like a business leaders from risk angle, because they tell them these are the risks, as how you're going to mitigate, how you're going to manage it. That's much more sort of a concrete push. And then, but when the ESG investor push it hard, and the business leader and a political leader agree to do that, they put that into the policy, and then I just want to share what happened just 2 months after the Prime Minister Suga announced the 2050 net zero. Now every single day on the Nikkei newspaper, the keyword search of the climate change or like a net zero or like the carbon, give me like more than 20 article hits. So now it's bringing the more and more opportunity to invest in. So you can start off with the risk side, and but then the policy and opportunities. But that kind of like a transition have to happen. But my advice to investment professional listen to this is, whether I'm optimistic or not, we will face a really serious situation. We fail to deliver Paris Agreement, so we just need to avoid it as a society. And also, this is another way to interpret what's happening now with the digital transformation and the green innovation. Some people say this is the industrial revolution number 4, fourth industrial revolution. And a Japanese Business Roundtable called it the Society 5.0. But what about you name it? We are now seeing kind of like a industrial revolution level of change in the system, and it's caused by digital and caused by the green or sustainability needs. And I really wanted you to think, what's a role we must play in that type of situation? Like, if we look back, what the financier or like investor played during the industrial revolution. The investor took a lot of risk, and they shared the risk through the insurance mechanism and etc. And they came up with the idea of portfolio management. But we took a risk, and we took a risk to promote and accelerate those changes. So here's something. Over the last 50 years or so, we just continue to persuade ourselves, the asset managers or the financial professional. We are very smart, but our job is to pick the good one and dump the bad one, and trying to be a bit better off than the others. But I think that's not probably the mentality the financier had during the industrial revolution. So we are facing a green and a digital industrial revolution, and what the kind of role we can play. I think we have to be more innovative, and that's how my title of the UN Special Envoy came from. I really expect our industry and a PHP professional in this industry become more creative. or innovative to solve the problem. So we are facing once in probably 100 years time of the paradigm shift. And I don't think the industry can be, just sit on the fence to observe and being just critics, which is not, the way for us to survive as an industry.
So thank you for that, Hiro. I don't know whether most of the people who tuned into this on a Sunday morning were expecting to be so deeply reflective, particularly of the age of enlightenment and the Industrial Revolution. So maybe I will cap this section of the conversation by saying Hiro's comments, and I will add mine as well, to have you think about what Jeremy Bentham said in those long days ago, which was that society is about the greater good of the greater many.
Yeah.
And can it be achieved in the manner in which Hiro has just spoken about? I leave that to you. Or as Victor Hugo said, it's a good idea whose time has come, and I will add the question mark at the end of that sentence. So you can decide for yourself. And I think the important takeaway from this section of the conversation is it behooves you to think about it and reflect upon it and read up on it if you haven't already done so. Let me move to me wearing a different hat. And so I will say, having gone to school very close to Chicago, I will wear my Chicago hat and say that from a matter of the market and from the internals and efficiency perspective on the market, doesn't it require all types of investors? Doesn't it require day traders, machine traders, as we now know, the people on both sides of the GameStop and Blockbuster trades? And the very fact that in some sort of democratization process, all of them have a voice, isn't that integral to the development of markets and the eventual development of long-term asset owners as well? So,
yeah, well, I mean, a lot of people think I'm, I'm very critical about the short seller, and the Bloomberg made a big article out of my the 140 letters of tweets. I'm just the kind of like pulling leg of the hedge fund industry is now calling for the regulation on the the retail buying up to squeeze them. So, but I don't agree that the market is function well with all the different type of investors, which is true. But what I've been trying to say is it's only true if the older players, play the game fairly and also responsibly. And one thing, and also the market becomes neutral when the two side has some principle and then kind of neutralize out. And the reason why I have been pushing the stewardship or the sense of stewardship for big asset owners like a pension fund was, people are concerned about the short-termism of the stock market, and this GameStop one is the one way to actually bring that to the surface. I mean, but what's happening is we used to have a long-term investor and the short-term traders, but we are losing long-term investors. That's what I was trying to say, because I was managing a portfolio, and the mandate is to make sure we make the sustainable return for the 30 years. But we are so suffering from the media, like an attack when we report the negative quarter, right? So I think what's happening is asset owners, they call it asset owners, but and the long-term investors, but the way they incentivize their manager internally or externally, it doesn't reflect what they say. So, the most of the asset owners, they actually revise the asset manager's contract on a quarterly basis, or sometimes on at the best annual basis. And GPIF, we changed that to like a 3-year contract. right? So the active managers, I mean, passive, they are not evaluated for their performance, but active managers, they are evaluated over 3 years, the time horizon, right? So then they have to just manage the portfolio, whatever the way to make sure that the portfolio performs, but they don't have to just focus on the short-term performance, right? So that is the one strong signal we're trying to send, because we talk about the importance of long-termism and important role of the long-term investor, like the pension fund, but we are not exactly very the consistent in a way we operate. So those kind of things is what I've been challenging. So the short selling and the hedge fund, it's okay for them to do it, but the point is, they borrow stock from the pension fund, and the pension fund has no idea who's borrowing it and where their stock is today. And those kind of lack of transparency, and also the this time the retail investor trying to push it back, and now the retail investor kind of restricted, and those kind of things. So is is inconsistent. So what I've been trying to promote here is, we really have to revise our system once again, because we created a system which is there a lot of the misrepresentation or the vacuum of responsibility, a vacuum of ownership. But at the end of the day, I don't disagree that the market is healthier with all the different the views incorporated. But we always talk about the business model of the company we invest in, but we pay very little attention to the business model we created and we are operating in. So that's the only things I've been strongly kind of advocating, but it's just not exactly true that I'm particularly dislike one particular type of investors. But my argument is, if you are pension fund managers, you try to be the sort of like weight to kind of bring the market out of the short-termism, because short-term trading we will continue to see more and more, because the machine can trade at the nanosecond. Right. So if you talk about the average holding time of the U.S. The stock market, the investors now becoming less and less, and maybe in the near future we're probably going to see the average holding period is less than a second, and that's actually in the foreseeable future. So my argument is, as a human investment professional or financial professional, we need to pray to create the balance between, balance against those like a machine who trade with the sort of, I don't know whether I should call it the short-termism, but the real short-term, decision making.
Nanosecondism, yeah.
Nanosecond, yeah, the decision making. So we cannot compete with them as a human, but we can compete by to bring in more long-term perspective and a more holistic perspective. So that's what I've been hoping, and that's what I've been questioning all the time.
So I must compliment the organizers of this conference. They have titled this "Confronting Disruption," without fully knowing that on the third day, a Japanese gentleman would be suggesting that we create positive disruption, at least in the way we approach institutional large-scale investment around the world today. So thank you for those comments, Hiro. What I'm going to do now is I'm going to cycle through the questions that have come. I think that's very useful, because rather than you and I speak about this, I think it's useful. Already the comments sort of reflect some absorption of what you have said, and in both the positive and the critique sense. So I'll go to that right away. So the first question is yet another force of disruption which is upon us, which is social media. Mm-hmm. And sort of the intersection of these two things, sort of the suggested disruption that we're sort of just beginning in the institutional investment world, and the somewhat 10-year-old disruption that has already come from social media, which in many ways has already had disruptive effects in political systems around the world. So, what do you think is the role of social media? That's one question in this transformation. And then the sort of the corollary question: what is the role that regulators broadly, but financial regulators in particular, must exercise relative to social media in the context of ESG, to use a simple term, but the broader context of this new idea that you're proposing?
Yeah, this is a great question. I mean, as I said, like, you know, the SNS actually democratized everything, and it's probably in the long run that's the way we should go to. But we're gonna have a lot of like you know, there's more than a hiccup, but there's like you know, a lot of incidents which you know, things goes out of control, and being disruptive is, you know, making things out of control, but for good purpose. So I actually think like you know, the SNS actually should play better role. But on the other hand, as you know, at least the financial regulation is on how the investor can communicate, on how, you know, what kind of information they can float around, and you know, they are restricted not to make a sort of like a misleading comments and etc. But there's no you know, the regulation over SNN communication. So I think that's you know, the GameStop with the situation is it's going to be our the kind of big case study for regulators. And at the moment, I don't know how they do, but I strongly believe that SNS is a public conversation, and I think the public conversation should have some restriction. I mean, whether it's a financially related information or not. I mean, you know, it's not like you are talking to your friend in a bar. It's more, it's basically you are talking in public. So I think the information being circulated, which has the sort of material impact on the financial market, I think that should be some control over it. But on the other hand, as I said at the beginning of my remarks, is like you know, this should be a wake-up call for the you know, the institutional investors or like a financial professional. I mean, kind of the privilege they used to enjoy is now, you know, is getting challenged. And also it becomes, you know, it happens everywhere in any industry. So we need to deal with the SNS, and we need to deal with the you know, internet. And our industry has been, to be honest, very slow. I always joke that you know, if we apply the same standard of like you know, the digitization of our business as we demand from the portfolio company we invest in, our industry should be dead, right? So we are very, very slow. So I think this should be a wake-up call. I mean, that we just need to be much quicker in adopting the digital technology in our business, and at the same time, we should discuss openly benefit and also the risks of those SNS communication of the financially material information. So ESG is another thing. You know, if it's not financially material, it's probably not necessary for the investor to use, but it's becoming more and more recognized as the financially material information as well. So the floating of ESG information on SNS should require some attention. So I think that my argument here is it has pros and cons, but the one thing is very clear is our industry has been quite slow compared to the others industry which we are investing in.
Okay. I mean, since we separated it, supply side and demand side, the next question is on the people side of the whole equation. And Vidhu Shekhar asks a very interesting question. Who is more important? And I'm going to mention the edit that I've made. The original question was Larry Fink or Greta Thunberg, but I'm going to add Hiro Mizuno to that list as well. So who is more important? And will the leadership for this change come from the principals or the agents or people outside this system? So I think there's a two-part question, because leadership as it is personified is important for any transformational change. So who should we watch out for? And then second, disruptive leadership often comes from outside the system. The Meiji Restoration being a classic example in Japanese history, and so on. So your thoughts on both?
Yeah, sure. Well, I had so many debates with the with Blacklock and a lot of things. So this is like the Asian principle, the classical debate, right? So if you look at the Larry Fink's letter, it sounds like a principal's letter rather than an agent's letter.
Sorry, if I could just interrupt a second. For those who haven't read it, Larry Fink writes an annual letter, and the 2020 letter was focused heavily on ESG and caused quite a bit of stir. I know that substantially many of you would have read it, but for those who have not, it's worth referring to as sort of at least one additional fillip to this fork on the road. Please go ahead.
Yeah, so so this is not the sort of like a black or white of who starts, because the if asset manager is a merely agent, or sometimes they say we are merely agent, right? So, but on the other hand, they are much more resource, much more sort of like a much more advanced compared to the average clients, right? So I always think that is their responsibility to educate customers, right? Because the big asset managers, the who are paid well and they are resourced, and that's kind of to some extent that's their business to educate the customers. So I think it's okay if the asset manager believes that ESG must be important part of your investment decision. That's how they should educate the customers, because in many industry it happens, right? The leader in the supply side, they educate the customers because the customer don't know what's important, right? So I did never ask the Apple to create the iPhone. I never asked the Steve Jobs to create the Apple iPhone, but they did it, and we were educated, right? So I actually don't think like it has to come from the principal or buy side, because sometimes supply side can come up with the business idea, product idea, so they can educate. But on the other hand, I always feel like we have to have a responsibility as the big asset owner. If you're a big asset owner, you have to have a responsible, you have to, the assume responsibility being a big owner of the global economy. So I think I've been advocating that the big asset owner should be more sort of like speak up and step up as a responsible owner. And actually have to push the supplier or agent to do a better job. But for let's say retail investors, I don't think they have time to study ESG by themselves. So the asset manager have to educate them by promoting new ESG product. So I think those both sides have to speak up. But historically, asset managers play the bit of both sides. Sometimes they refuse to commit to the ESG, saying they are just a mere agent, and at the other time they actually say like they sounds like we are promoting this. So it's a I think all the business has the both sides. So we just cannot say you are agent, you cannot do this. And also some people say CEO is an agent of shareholders, so the CEO cannot decide whether the environment is important or not. But I think that kind of like an agent principle decision, I'll leave it to the legal, law school professor. But the for us, so we always have like an overlapping effect. And people like Greta or like a UN Secretary General, they just raise the public awareness, and it's important because when the public have more awareness, they may put some impact. They make impact on their own policy leaders. So the policy leader changed the strategy or like a regulation that will cascade down to the portfolio analysis and the ultimate return for the investors. So everything is kind of like connected. So it's hard to say who should be. I welcome the Larry Fink's the very, very strong and explicit statement. And I think it's probably the asset owner's now job to make sure that the BlackRock, the actual operation reflecting what their CEO is talking about. So I think we just need to work out from all the side. And I think the disruption happens when all those like a big actor and actresses started pushing the same direction. And I started feeling everybody's pushing the same direction over the last several months. And particularly after President Biden elected, we just felt a very strong push from the US policy side. So just to answer your question, like kind of wrong, but that's how I think. Everybody is important, and I welcome everybody just stepping up.
Yeah, maybe I'll really use an old metaphor by saying I'm going to shift gears here, but in the future there will be no gears. There may not even be drivers. But let me shift and ask you, since you're from the United Nations, you probably know this language. Let me ask you a north-south question, which is, and I'm sure you've heard it before, but Sachit Damani asks the following question, which is ESG sort of the privilege of developed countries and the privilege of asset owners who've already built their asset to a reasonably large size? And it's not a luxury that China, emerging markets, and LATAM and others can have. I mean, this is, as you know, a very common debate in the environmental spectrum, which is having polluted the earth for 200 years, immediately after the Age of Enlightenment, I might add, was not very enlightening for the rest of us. There are 5-6 billion people. Then you impose all these restrictions. So that's the north-south question. So how do you respond to that?
First of all, some people say like the only established company can afford ESG in their business, which I don't think is true. Actually, if you are established, you probably have access to capital market anyway. So it's probably more critical for the company who's not as established as the top the industry leaders, and that concept all like applies to North and South discussion, because I've been advocating like country sovereign credit rating should reflect the ESG factors more for the developing countries. Because the one way to look at that was, I'll just give you one example. I mean, there's a lot of studies like climate change affect harder, those developing countries than developed countries, right? So the climate change and these pandemics actually hit them harder, right? So ESG is like environmental social governance factor is much more attributable to how they grow, how they develop. And there are so many reports made. I mean, when you look back, well, Japan is one of few countries successfully and quickly emerged from developing status to developed, into the developed country league after the last, the World War. And there's so many research made on that. What differentiate the some countries who succeeded and the others still struggle? And the two biggest factor in those analyses, one made by the World Bank, which I read, was education and healthcare. And now I want to add the environmental protection too, right? So those factors, it's actually a very strong, like statistically significant determinant of the country's development, right? So. But if you look at the conventional credit rating analytics on those the developing countries, I think the weight on those are too little and too low. And so I think I've been advocating, the developing country, they should they should be given more weight on the ESG factors in their credit rating. And on the top of that, I think if the developing country wanted to build the solar power instead of coal-fired power, they should have better access to the capital market, or better access to the financial market. And then that's the reason I've been, suggesting those developing countries should issue green bond to attract the ESG or green-minded conscious investors. So I think the ESG is probably even more relevant or meaningful for the developing country or less established businesses either way to pursue. And that's one of my ambition, to promote the more money through those the ESG labeled product directly into developing country to build the sustainable infrastructure, for example. So I think that's my answer. That should be, it should not be a luxury for the developed nation. It should be more effective tool and a convenient tool for developing country to use ESG.
Terrific. I'm just going to not take these questions, but sort of summarize the gist of the rest of the questions before we bring this whole session to a close, so that you're aware of sort of the spontaneous reaction that you have generated in this conversation. So I think, I hope in your various roles and through the CFA Society and others, you can share in forums such as these, but also in through the social media and through the internet, ideas about how companies and professionals can prepare themselves in a much more tactical and day-to-day sense, if and when this journey is upon them, and based in part on how they themselves elect to conduct their own futures. I think you've made a very, very strong case for people to think deeply, to reflect, and to think about this greater good, rather than merely check box an idea that we might all have learned in school, but which, like all education, needs to be updated and evolved with the change, to really mix the metaphors in the environment. So with that, I thank you again, Hiro, for a wonderfully stimulating conversation on a Sunday morning. I hope our members heed your requests and your quest for self-reflection. And we will, of course, all see how this goes forward. But I think several of us can play a role in helping this disruption come about as we go forward. So thank you again.
No, thank you very much. Thank you for you're a very good interviewer. Thank you.
Let me pass it back to Rajendra to conclude the session.